Hello and welcome back everyone to this weekly update on the financial markets. I will cover with you like every week the financial markets via price action. We begin with the S&P 500 index, US oil, gold and Bitcoin against US dollar. And afterwards we will have a look at my watch list, single stocks, indices, crypto, etc. I will show you all my active trades that are interesting. Most of them I have flagged right now, and we will have a look at the weekly, daily and our time frame. Let's start directly in with the S&P 500 index on the weekly time frame. S&P 500 index on the weekly time frame, you can see we are trending to the upper side with higher highs followed by higher lows. And you can see right now we are pretty near a new all-time high. We had a smaller correction of 4 red weekly candles, probably enough to reset sentiment here, and then a nice green candle pushing again above this 10-week moving average. And I'm already in long trade. More to that on the lower time frames. The daily time frame, you can see I have drawn in here an A, B, C corrective pattern. So sideways consolidation that is breaking out to the upper side. I decided to get long in this index again. If we see prices above point B, we have seen that already. Because of that, I'm in a long trade. I was setting my stop loss below this complete corrective pattern, below point C, risking 1% of my account balance on this trade. My trade target would be first a 1-to-1 risk reward ratio. There I want to take 1/3, a little bit more, 35% of the position from the table to reduce my risk here. And then I will probably trail my stop loss up, and we will see how far this year-end rally will go. Probably also into Q1, we will see. But I'm bullish for the index. Of course, I can be wrong and we will turn and take my stop loss out. Then I would get defensive on the broader stock market. Yeah, would probably expect a corrective move all the way back down to this weekly support zone around 6,120 points in the index. That's all for the S&P 500 index. That's interesting. And I will continue now with US oil. US oil on the weekly time frame, you can see a red monthly downtrend line. That one got broken to the upper side. Afterwards, we went into a weekly corrective move. You could argue that we could see here an A, B, C correction. Point C, the lowest point of the complete movement. So far, we haven't seen a lower low, so that remains point C. But at the moment, also here weak price action. So if we see a lower low here, point C would also move then lower, and we would have to wait. So real confirmation that we are finished this corrective move would happen after seeing a significant price above this orange weekly downtrend line. If we drop one time frame lower to the daily time frame, you can see here that was point C. So far no lower low. We have a secondary daily downtrend line that is printing at the moment higher highs. So far not, it's printing so far higher lows, but not higher highs. I would wait for that as a confirmation. So it gets interesting on the 4-hour time frame. Here you can see we have a significant 4-hour support and resistance zone. Here we have seen the breakout out of this daily secondary downtrend line, testing this 4-hour resistance, getting rejected. And if we are not making a lower low and continue higher and take that one out, that could be the first sign that we're changing from a downtrend to an uptrend. You could think about long positions here, but if you want to be sure or safe, you wait for prices to get above this weekly orange downtrend line. I'm not betting on falling prices. I think oil is already pretty cheap. the government of the United States is working on it, that it stays cheap, so maybe not too much price action expected here in the coming days and weeks, so probably also no trade. Otherwise, it looks at gold. With that one, we continue now. Gold starting on a weekly time frame as well, so one single candle represents 1 week of price action, so a large time frame. We have here massive resistance. That one got broken after a couple of tests to the upper side, and since then we went into a nice uptrend, trending higher highs followed by higher lows and smaller corrective moves all the way to the upper side. Pretty explosive, a lot of momentum. We are here right now in another corrective move. We tested the 10-week rising moving average, and so far every candle was staying above that one. Pretty bullish in my view. We haven't seen a new high, so the possibility is there that we are staying in the range and also maybe test again the 10-week moving average to the downside. We will see. But if I look at the time each correction has taken, we could also finish at one right now and explode higher again like we did in the past. If we drop one time frame lower to the daily time frame, you can see here the daily secondary uptrend line was broken. We have fallen a little bit below that, testing the 0.382 Fibonacci retracement level, right from the last major low to the all-time high level. From there on we recovered, bounced at this broken daily secondary uptrend line, made a higher high and continued higher, and now we have taken already out this high here, and there the idea came to get again long in gold. Pretty tight stop loss. You can see it better on the 4-hour time frame. You can see where price bounced on the 4-hour time frame, so I was able to draw in here for our support and resistance line. Here it was support, here it was a couple of times resistance, and now we have broken that resistance again to the upper side, so now it's again support. If we test that one from above now, I placed my stop loss below that, below this 4-hour uptrend line, and the last sideways price consolidation to protect the stop loss from taking out if we are right with the major direction of the next move. I would take half of my position, or even more, a little bit more than half of my position from the table if we reach a 1-to-1 risk reward ratio. So I made my risk as profit, and then I take the trade with that risk free. That would happen at a slightly higher high, and maybe we bounce from here and get rejected lower and stay in that range, or we continue higher, and then I would maybe take partial wins along the way to the upper side. But I will manage the trade then together with you and update you like always in my weekly videos. So if you haven't subscribed yet, now is the time. Yeah, that's my idea for gold. For sure, I can be wrong. We could stay in this range a little bit longer. Need a little bit more time for this correction and consolidation to work out before enough buying power wants to get in this market. And yeah, but I'm more bullish than bearish, definitely. So decide for yourself. Next on list, Bitcoin. Bitcoin against the US dollar on the weekly time frame. That one looks pretty weak, even if the weekly uptrend is technically still intact with printing higher highs followed by higher lows. But that one was a really deep correction, and it's maybe not over yet. We found hold at the 0.382 Fibonacci retracement level. That's an important level for an uptrending market, so hopefully that one holds. We have seen a MACD divergence on the weekly time frame, and that was an early indicator for price turning maybe to the downside in a huge corrective move. I also was ignoring the sign because I wished for higher prices to the end of the year, or the past has shown that that's the likeliest scenario. So I was betting on that one. So I lost a lot of profits on the way down here, but I learned from it. You can rewatch prior episodes if you want to know more about the last Bitcoin trade. On the daily time frame, you can see it in a little bit more detail. We have broken this weekly orange uptrend line to the downside and also below an important daily support zone. From there on, we bounced to the upper side and went into a sideways consolidation and staying but mainly at and below this daily support zone or resistance zone. It turned resistance the moment it was broken to the downside. We are also below the daily secondary downtrend line, and we are seeing right now at the weekend market some weakness. Bitcoin is also trading on the weekend, so that's the difference to the stock market. We can see here an 4-hour uptrend line, and if that one breaks to the downside, I think that's a bearish flag pattern and we will continue lower. Whereas the next target, $72,000 per coin, would be the next major support area for price. So I think if we lose that one significant to the downside, maybe a break, retest, and a break of the retest to the downside, then the likelihood is pretty high. Then we will continue lower, and that the 4-year bull cycle is already over, and then this year would be the all-time high for this 4-year cycle. But for sure it can happen that we will reject a little bit lower, maybe some weekends getting out, and then we see the push above this daily downward line, breaking it to the upside, corrective move, break of the correction to the upside, and continue again higher. That would be a nice scenario, especially if you are invested in Bitcoin. And this here would be then the situation to think about maybe another long position. But I would take partial wins pretty quickly, so to reduce the risk or eliminate it completely, because maybe that's just a reaction to this fast falling prices. So that cat bounce, you can call it, and then we will turn again lower and continue the overall downtrend. Because if Bitcoin goes from a major uptrend to a major downtrend, we often see 70 to 80% declines, and we haven't seen that yet. That's my view on Bitcoin. Pretty indecisive now. I will see what price action does, but if I would have to guess right now, I would bet more on falling prices than on rising prices. Let's continue with my list of single stocks. Investor AB Class A, you can see a nice rising stock overall. I went into a long trade after sideways consolidation. Price was holding back by the 200 moving average. That one got broken as well to the upper side, and then I went along, stop loss below the last significant low, aiming for a 2-to-1 risk reward ratio with that trade. And we are currently pretty near the all-time high level, with a little bit of sideways action here. The moment this one breaks to the upper side, I want to move my stop loss below this sideways consolidation and ride the rest higher. Reduced already my risk a little bit, moved it from the initial stop loss below this daily support zone and below the 200 moving average, because I think if we reverse from here to the downside again, then I don't want to be longer in the trade. But my expectation is pretty positive for this stock. I think we maybe bounce a little bit and then finally break to new all-time highs to the end of the year or beginning of the new year 2026. And I think my profit target isn't really unrealistic here. So I just wanted to inform you guys how the trade is going, that I reduced my risk here a little bit. Next on the list, Snap-on. Snap-on incorporated on the daily time frame. Here you can see also nice uptrending stock with smaller corrections and sideways consolidations on the way up, always supported by this daily orange or this weekly orange uptrend line. We had here a nice corrective move all the way down to the 0.618 Fibonacci retracement level, measured from the low to the high of the movement, and it was also the daily support zone of the prior all-time highs. Then we have seen this daily wide downtrend line breaking to the upper side, and here it was deciding to go into a long trade. We have seen another corrective sideways move supported by the 200 moving average, and yeah, finally we have seen at the 4-hour time frame breaking higher into my profit zone. Let's switch back to the daily, and I decided here to move also my stop loss from the initial stop loss slightly below this sideways consolidation, the lowest point of that one, and so I'm not fully exposed to my risk here. I would like to take 50% of the position from the table if we reach the all-time high level. With that, I would also go risk-free in the trade, and then we will see how far I can ride that long trade higher. Next in the list, we have Evercore Inc. Evercore Inc. on the daily time frame, you can see also uptrending. Then we had a high, a huge corrective move to the downside. Then we tried again. We found some resistance here, broke the resistance, turned support, bounced a little bit below that, and now this secondary daily downtrend line was broken to the upside in combination with this daily support and resistance zone, and I decided to get long after seeing point B of this ABC pattern getting broken to the upside to get long with a stop loss below this complete ABC pattern, point C. There's my stop loss, risking 0.5% of my capital on that trade to make a nice risk reward ratio, maybe 2 to 1, 2.5 to 1. We will see. We'll probably also take some profits from the table once we reach one time my risk. So I make the risk as my profit, 1 to 1 risk reward ratio, and then I ride the rest higher. And at some point where I see price structure between the current price and my entry level, I would also move my stop loss to my entry level, and then the profits I have taken till then are not at risk anymore. Next, Markel Group. Markel Group Inc. on a daily time frame. Some people call this stock the mini Berkshire Hathaway. It's a bit more aggressive, a little bit smaller. So yeah, a nice uptrending stock. You can see that we are well above the weekly uptrend line we found at the prior all-time high. Resistance bounced, found again a resistance, bounced, and finally we broke it slightly to the upper side, sideways consolidation, and then breaking the sideways consolidation at the all-time high level to the upside. That's pretty bullish, so I went long in this stock, stop loss pretty tight below this sideways consolidation at the all-time high level, aiming here for a nice risk reward ratio. It's not defined yet. I think that 1 to 1 risk reward ratio will take again profits from the table, ride the rest higher, and trail my stop loss higher with higher price action, sideways consolidations, hours box, etc. I keep you updated if you subscribe my channel. Then we have Broadcom. Very interesting stock right now. Broadcom Inc. on a daily time frame. Yeah, a pretty nice AI stock. It's one of my best performing assets in my investment portfolio. You can see here with the green dots where I started buying the stock. Went pretty well. And yeah, we had a nice ride to the upside. Then sideways consolidation on a pretty high level. This sideways consolidation was broken to the upper side. So I decided to went long, stop loss placed below the sideways range. And everyone was expecting good earnings of this quarterly report of this stock. But like you can see, that wasn't the reality. And we declined lower. Luckily, I have moved my stop loss already higher below this setback. After seeing the setback broken to the upside, I moved my stop loss to that level. And because of that, I was not losing 0.5% of my account balance, but less than half of that. I lost $236 on that trade, and that's fine because yeah, maybe you'll find another nice entry in that stock. You are buying lottery tickets with a statistical advantage here, but sometimes you lose. That's the thing with Broadcom. Next, Blackstone. Blackstone Inc. on the daily time frame, you can see pretty volatile stock, but with huge corrections, and if it goes huge swings to the upside, we had another huge corrective move. The daily downtrend was broken to the upper side. We corrected again massively to the downside. MACD was crossing to the upper side, and I decided to give that stock another try and get a long here, stop loss below the lowest point of this movement. We was riding the price higher till the point I reached one time my risk, 1-to-1 risk reward ratio, and there I sold 1/3 of the position. I was making a profit of $246, and I already moved my stop loss to my entry level. So that trade is risk free, and I already made $246. I can't lose any more. If we zoom in to the 4-hour time frame, you can see this 4-hour downtrend, MACD divergence. MACD was rising, prices have been falling. That's a bullish sign. Then we have seen the break, retest, and then rising above this small mini retest. I went long, and that's the story so far. We are above the 200 moving average, correcting right now a bit. Maybe we'll turn and ride that one higher, or this one will hit my stop loss at my entry level. Would also be fine for me. Next, UPS. United Partial Service on a weekly time frame, because I want to show you the bigger picture here. That stock was rising one day pretty nicely, but then started declining like hell, and we reached a very important old support line here of this stock. So I decided that could be an interesting level for me to watch out for a counter trend move. If we shop one time frame lower to the daily time frame, you can see that I had this pattern here, lower lows, and we have seen a break higher. MACD divergence also. MACD was making higher moves while price was declining. So I decided, okay, if I see significant movement here to the upside, I would like to buy the next consolidation and the breakout to the upside. I did that. For this small trade, I want to go to the 4-hour time frame because you see more details here. We've seen a nice spike here to the upside, ABC corrective move. I was able to draw the 4-hour downtrend line, and once we was taking out point B here, I entered a long position, stop loss below the last significant low inside this corrective move, and I was planning to take 50% of my position from the table once we reach one time my risk. We are pretty close to that, and I also reduced my risk already a little bit, because I think if we fall below these candles here, the way is to the downside, the major next swing, and not to the upside like planned. If we reach my sell limit, I will sell 50% of my stock. Exposure here on UPS. that would take my trade risk-free, and then I would try to trade up my stop loss with a rising price to maximize profits. Next, not a stock, but a metal, silver. Silver, the shiny metal, had a hard time at the $50 level, once 1980 and another time 2011. Massive resistance, collapse afterwards to the downside. But this year we reached that level, got higher, retested that level and exploded again higher. That's pretty bullish and speaks that we're leaving now this $50 mark behind and searching for new resistance way higher. If we drop down to the daily time frame, you can see my last trading setup. Sadly, it wasn't triggered, and I explain you also why and what was maybe the mistake. You can see we are in a rising uptrend, all-time high here, corrective move, testing resistance at the all-time high, declining again, and then breaking with a nice green candle to the upper side to new all-time highs. You can see here a cup and handle formation. That's a bullish continuation pattern. Because of that, I was interested in getting long. If we drop to the 4-hour time frame, you can see the thing. Intraday, we moved at the breakout day pretty far to the upper side, and I thought, pretty expensive right now, risk-reward ratio a little bit bad. I would like to see a corrective move. I had here at this entry level a sell or a buy limit order, so if price would have came down, I would have bought, and stop loss would have been here around that level, so significant below this daily support zone, and would have ride this price higher. The price was riding higher, but without me on board. That can happen also in trading. We have seen on a high level sideways consolidation marked here with the 4-hour resistance zone, and we broke that one as well and continued higher, and my take profit target of 2-to-1 risk reward ratio was hit. And yeah, another chance would have been, after seeing this sideways consolidation on that high level, to speculate on a breakout after seeing prices above this 4-hour resistance zone. I haven't done that, but yeah, would have been a nice trade setup. I learned something out of it, and I hope you too. Maybe some of you guys have seen my video and are in this trade already. Then yeah, I would trail my stop loss higher, probably right now below this sideways consolidation here. I would place my stop loss, wait for the next corrective move or sideways consolidation, and if we break that one to the upper side, I would try my stop loss higher. Next, SK Hynix. SK Hynix Inc., South Korean stock, AI related. You can see it on the price action here. No explanation needed. We had high and corrective movement on a high price level. MACD on the daily was crossing or nearly crossing to the upper side. We have here daily support and resistance zone. And if we zoom in on the 4-hour time frame, you can see that the downtrend was also broken. Corrective move and then break of the correction to the corrective move to the upper side. I went along with this one in a slight profit right now. Stop loss was initially placed below the whole corrective movement, and I already moved it a little bit higher, because I think if we take out now this daily support zone to the downside, that will continue, and then the ABC pattern does not look like this, but instead it will probably look like this. So a little bit larger, and then I would lose $400 in a trade, a little bit less than 0.5% of my account balance. Then can I readjust if I see this usual downtrend that I would have to draw, then probably something like this. I could get again back in a trade, but maybe we'll continue higher without that, and then I would sell half of my position at the all-time high level, take the trade with that risk-free, ride the rest higher and trade my stop loss also higher with price. Next, Piper Sanders. Piper Sandler company, also uptrending stock here. We had an all-time high, a corrective move, a small break above the all-time high, nice corrective move to the 0.382 Fibonacci retracement level, pretty important level if you stay in an uptrending market. We have seen the daily break of this downtrend, and I went along already before seeing a new all-time high, so a little bit earlier. The conservative way would have been to wait for an all-time high. Went already long, stop loss below the major price action here and the breakout level. This a daily downtrend line, risking 0.5%. Also here, if we reach one time my risk, I would take 1/3 of the position from the table and reduce my risk with that and ride the rest higher. Next, the Japanese index Nikkei. The Japanese Nikkei index had its all-time high 1990. Since then, a huge decline and a long way to get again to a new all-time high. We've seen a new all-time high in 2024, then a corrective move on that level, and since then a pretty nice push to the upper side, supported by the 10-week moving average with really small consolidations on the way. If we drop to the daily time frame, you can see the daily uptrend is nicely intact. We have an ABC correction already broken to the upper side. MACD was crossing to the upside, and I went long after seeing prices rise with this nice green candle. At the moment, sideways consolidating around that level, so maybe the entry was a little bit early, a little bit higher would have been also fine. Stop loss was initially placed below this ABC pattern. I reduced it one already a little bit higher, below this significant last low and the daily uptrend. So I think if this index wants to run in this year-end rally, hopefully, then we should continue from here on and not fall below this stop loss level. If we fall below this stop loss level, I think that correction will be a little bit huger than expected. Next pretty explosive move on Carvana. Carvana Co on the daily time frame, looking pretty similar like the Nikkei, but on a smaller time frame, because the high was in August 2021, and we have seen a huge decline and a long way to the top, again making a new all-time high in August 2025. So yeah, 4 years later. And yeah, but that explosive move afterwards, seeing a correction and then a break higher with a huge gap to the upside. The earnings report has been bombastic. Analysts are loving the stock, and yeah, I entered long, stop loss below this weekly support zone and also below this daily support zone, marking the prior all-time highs. Yeah, I want to take a little bit less than half of the position from the table here. If we reach 1-to-1 risk reward ratio, setting the trade nearly risk-free. For sure, we can see here corrective move first before then continuation, but that looks pretty strong, and I wanted to give that stock a shot with 0.5% of my confidence at risk. Next, Allianz. Allianz on the daily time frame, also a nice insurance company with a nice uptrending stock price. The weekly uptrend is nicely intact with consolidations on the way up. The 200 moving average is supporting at the moment everything here. We had a sideways consolidation on a pretty high time frame, and on this week we have seen the break to the upper side, I went long on this stock and I was placing the stop loss below the last lows on the 4-hour time frame here, giving the trade a little bit of room for maybe a small corrective move to the middle of this price channel, and then continuation higher. Hopefully would take half of the position from the table with a 1-to-1 risk reward ratio, taking the trade risk free, and then write the rest higher and write my stop loss as well. JP Morgan Chase. JP Morgan Chase, one of my favorite banking stocks. We have a nice uptrend, pretty stable, far away from this weekly uptrend line. The daily uptrend was broken to the downside, but we would have to readjust it already because we have seen here a small all-time high, but I would argue mainly that we are in a sideways consolidation at the all-time high level. $1 or $2 above or below doesn't matter. And I'm speculating that if we see a break above this daily resistance zone or this sideways consolidation, that it's a good idea to get long again in this stock. I have placed my stop loss in the middle of the range to give it a little bit room to breathe, and I would take half of the position from the table once I reach 1-to-1 risk reward ratio, taking risk from the table, risk free, and the rest I want to trade higher, trailing my stop loss as well. You see one asset, another asset, a stock, but it's really pretty similar in strategy. It's not that complicated. You win big and you lose small, and after a couple of months and years that accumulates to winning portfolio. At least that's the idea. Next, JBL. To be honest, it looks exactly like JP Morgan. Nice uptrending stock. We have seen also here a broken daily uptrend line, sideways consolidation on the all-time high level. If we see a break above the resistance here, I want to get long, stop loss in the middle of the range, and taking partial wins, half of the position from the table. Once we make the risk as profit, and the rest, like you already know from the prior setups. Next, Tesla. Tesla on the daily time frame looking not that bearish, to be honest. We had a huge corrective move. That was also the all-time high level. We haven't seen higher prices since then. We have an intact daily uptrend line, corrective moves and sideways consolidations on the way up. And I think if we break the last sideways consolidation corrective move to the upper side and making a new all-time high, that could be interesting again for a long trade. Stop loss placed below the main price action of the sideways consolidation. And then I would like to ride that again higher. I would take partial wins on the way and try my stop loss higher. It could take a couple of days till that happens. I marked it here with a bell, so I get notified if I see prices above that level. Nice feature in TradingView. Then we have triple flag precious metals. Triple flag precious metals daily time frame. The beginning of the stock is 2021, so not that old. Sideways consolidating together with gold. The breakout came a little bit later than gold, normally with the metal stocks compared to the metal itself, but since then nice uptrend with corrections and consolidations on the way up. We have seen a new all-time high here, correction slightly below the all-time high, and then breaking the correction to the upper side. I went long here, stop loss giving a lot of room to breathe. Below here some significant price action on the lower time frames, and below this daily uptrend line. I think if gold makes higher highs like we have discussed here above at the beginning of the video. I think that will happen in the next coming weeks and months. Then I think these metal stocks should profit from that as well, and even more exponentially. Because of that, I'm happy with the trade. But if it reverses and breaks this daily uptrend line, I will be out of the trade and I will have lost 0.5% of my portfolio with that idea. Next, uranium. Global X uranium ETF. So that's not uranium itself, but the stocks, the producers, and everything that's around the ecosystem of uranium. And you can see here we had the sideways price channel, and that one got broken to the upper side and corrected, and then price explosion to the upper side. That had to calm down, and we calmed down by a lot, testing this daily support zone that was the high of this breakout. Since then we got rejected higher, and I don't want to move that one. And I think if we lose this daily downtrend to the upper side, that could get interesting for a buy trade, a long trade. And the idea is that we will not see here lower lows, but instead small correction and then breaking this correction to the upper side, and then I want to get long. Stop loss will be then placed below this movement, so I can adjust it along the way. Price action dictates me where to place my stop loss then. But that's the setup, not active right now. So if you are interested and you find this idea useful, you can think for yourself if you would like to get the trade like this or similar, or avoid it at all. That's your decision. Next, Novo Nordisk. Novo Nordisk class B stock, a nice uptrending medicine stock, pharma stock. But yeah, it looks nice, right? And then breakdown. The stock is hell. It's so cheap. It never has been that cheap in the prior history of this stock. So it's getting fundamentally also interesting, even if that's not my main view on these markets. But more technically, we have this weekly downtrend line. We have a MACD divergence on the weekly. So all pretty positive. And it seems like sellers are exhausted and maybe buyers buying power gets back into control. If we switch to the daily time frame, you can see we have here the first breakout in a while out of this weekly downtrend. Also MACD divergence on the daily time frame. And if we drop even lower to the 4-hour time frame, you can see we have here a 4-hour resistance zone. And I think if that one gets broken to the upside, that could be the first sign, positive sign for the stock to change from a downtrend to an uptrend. And I like to be early in here. Stop loss placed below this sideways consolidation, not taking the lowest point, but the place where the most price action was ending to the downside. And I would ride that higher, because in a downtrend you're trading against the major trend. That's definitely the downtrend. I would take partial wins pretty quickly, so I would reduce my position by half, take the trade risk free, and yeah, then ride the rest higher. Maybe if that's the low of the complete movement and the next major movement is to the all-time high territory, that can be a really profitable trade. Even if we're risking really little, we can make a lot. Lottery ticket, like I said before, but I will use that chance here. Maybe we will not get triggered and we will turn right here and continue lower. Then I would have to readjust this weekly downward line. Would be also fine for me. You can see on this all these green flags, I have invested long-term dividends, etc. But that's apart from the trading story. Then last on the list, also an health company, Elevance Health. Elevance Health on the weekly time frame, that stock has a nice uptrend, monthly intact uptrend, pretty near right now. We have here a heavy weekly support zone. Price was bouncing off from that to the upside. We have on the weekly MACD divergence showing positive signs here, and also the weekly downtrend is broken to the upside with this nice green weekly candle. If we drop to the daily time frame, you can see that we have making here lower lows and lower highs. That one here was the first higher low, so I'm expecting now a higher high. So I'm early in this trade to our moving average at the moment resistance combined with this support and resistance zone. At the moment resistance until we break it to the upper side, then both of these things became support. And yeah, I think that's possible for that stock, even if I'm not waiting for the confirmation to see a higher high. It looks like a bottom for me at a significant price level, so the chances are high, and I take the risk with 0.5% of my account balance. Slightly triggered, so if you want to take the trade as well, still possible on Monday again, but make research and decisions always by yourself. That's everything I have right now for you on this weekly update. I hope you enjoyed it. Till next time. Bye bye.